Now let's get talking now. I'd like to get your thoughts. Let's begin the conversation with your thought on the latest move by the Apex Bank to increase interest rate by 400 basis points from 18.75% to 22.75%. What is your thought on this? This development has called for a lot of reaction. Many are against it, some are opposing it. What is your own thought on this?
For me, I would want us to start from this angle. Last year, from the month of July, the Apex Bank has failed to actually hold MPC meeting. So what it simply means that the NPR has been static at that level since last year. And don't also forget that the total number of rate hikes that we saw last year was about 275 basis points. But when you now compare that with the level of inflation, outside movement inflation, we saw that 600 basis points movement in inflation figure last year. So if you look at those two figures, it doesn't seem as if we are actually fighting inflation because the inflation has moved by 650 basis points, but yet we have only hiked it by 275 basis points. You call to question that what are we really doing? And I think that's one of the reasons why the central bank was actually the monetary policy committee in the last meeting. And let's look at it from this angle. We skipped July, we skipped September, we skipped November meeting, and we're having the first meeting in the month of February. I think anything lesser than that would have been a disappointment to the market because at the point, came of the view that they will prove this case that can do is about 100 minutes for that at the time. I think we have already having a view that if the policy committee needs to do anything this year, they need to do 200 days. So that was, I was assuming that the meeting will hold in January before they actually release the circular that the meeting is going to hold in February. But with what happened between that January and February, I know crystal clear, it was crystal clear to me that we need to be more bullish considering what happened to Naira. How Naira still measured within that period of time. And don't also forget that the only weapons or some of the problems that the Apex Bank has to actually fight inflation and also to ensure stability of Naira is monetary policy rate. And aside that, the CRR and also issuing of bills and others like that. So I think what they used, what they did was to ensure that the monetary policy rate is now more potent because before at the time, and I think it was not actually monetary policy rate, but with what we are saying now, it's now becoming more potent. It simply means that we can now use like the monetary policy to control the activity of the market. So for me, I think it's exactly as I thought. At the time, I was of the view that it can be as high as 500 basis points, considering that is what the foreign investors are already going before the meeting. But 400 basis points for me is not totally out of place.
Now, let's quickly dive straight into this now. Let's break down every of these components together and see how we can make sense out of it. One of the major reasons given by the MPC for the hike of MPR is to combat or rather tame this stubborn inflation that is eating deep into the pocket of the average Nigerian. You will agree with me again also that for the past 2 years, there has been an increase in MPR to curb inflation, but nothing much has happened. We'll keep seeing inflation skyrocketing. Now, if you look at the international scene, now you see that what's it called now? The Federal Reserve of the United States hike inflation and hike interest rate and the inflation reduced. Bank of Japan also did the same thing, and there was a decline in inflation. But do you think that in Nigeria, with all of the hike in monetary policy rate, we've not seen any form of deceleration in inflation? And not to also add that the CBN is targeting a 21.4% decrease in inflation, with all the fundamentals being in place right now. Do you see all of this achievable? And do you think that a continuous hawkish stance of the Apex Bank will bring inflation to its lowest minimum? Your thoughts on this?
So, if you want to be clear about this, the current situation in Nigeria is two different. We have the demand side and we have the supply side. And I think the major one that's actually affecting the economy is more the supply side. But the beauty of the fiscal policy is to handle most of the supply side angle. But the demand side is the responsibility of the Central Bank of Nigeria. And for Central Bank, what they are just doing is that they are doing their bit on their own side. Our bit is to ensure that the demand side element of the inflationary pressure is actually totally removed, so that the ball is not in the fiscal policy guide side to ensure that the supply side also is properly catered for. And when you look at the supply side, you look at the flooding issue that is affecting farmers, you look at the level of insecurity, farmers are unable to actually access their farm because of level of insecurity. You look at transporting goods from food from the north down south here, where the market is, where they really have the market, and also the struggle to transfer the goods and bad roads and high cost of transportation, and all those things are some of the things that are actually pushing inflation up. And don't also forget that part of the inflationary pressure is also there's an element of exchange rate effect actually filtering into the current and so the beauty of the central bank is the ensure stability of the current, to ensure that they can able to actually keep inflation on the check, and that's why they are doing their own side of the bid to ensure that one, their stability of currency, two, to ensure that their side of the bargain is catered for. So the other side is now for the fiscal policy guys also now to step up their game to ensure that the market can also feel the effect of their own side or what they need to do around inflation, so that the handshake between the monetary policy guys and fiscal policy guys can actually give us the results that we are expecting. And looking at the figure expected, they are expecting a bit not of 1% for the year. I don't think that is too bullish for me because aside the current policy being adopted by the Central Bank of Nigeria or the monetary policy guys and the Central Bank of Nigeria, those also forget that there will be an element of base year effect that will also kick in at the time in the year. So from the months of April, they will start being the effect. You know, as a result that the inflation is not starting aggressively because the higher fees for last year, higher numerator for last year. So you will know you're there to reduce the effect, you understand, for this year. So I think that the central bank is doing their part. Just that the fiscal policy also needs to actually increase their part. In such a time when you are seeing this level of inflationary pressure, the focus would be to ensure that you discourage consumption and encourage investment. And that's exactly what Central Bank has done. We saw automobiles close around 21% last week, and simply means about the effective use of over 7%. And we saw that NCB consistently has been doing 90% for a 1 year paper, and effective use of about 23.45%. It tells you that government is now the central bank is trying to actually get people out of consumption into savings or into investment. And aside that, also they are also bringing people out of speculating on the currency into actually putting funds in incredible investment like treasury bills, like bonds and the like, so as to actually ensure the stability of the currency. So I think what the central bank, they are doing their bit, what needs to be done. And I agree with you that for over time we will not be able to see the effect of the increase in
increase, yes.
And you compare that to what we saw with Fed. But when you look at Fed, you know that they were consistent in the rate hike. They were consistent in the rate hike for a long time. And at the point in fact they dropped, and we know that it's starting the effect. But if you look at the way we have been doing it, at the time we raise 100 basis points, we do 25 basis points, we do 50 basis points. Yes. I don't think we are actually putting we are being opposite enough to actually curtail that inflationary pressure at that particular point. So it simply means that the level of risk hike that we have done in the past is not enough to cater. And because we were doing it in bits, we didn't do it aggressively at the time. Maybe if you have done it like 200 basis points, maybe 2 times consecutively, who knows whether by now would have been able to see a better result than when we had a point. But whenever you wake up in the morning, now we move up. And we know that we need to be a bit official around that to ensure that we can bring inflation under control.
I like your stance on all of this situation and the insight you're giving us to it. But then again, I need to ask you this question. Do you see the central bank achieving its projected inflation target of 21.4% this year, 2024? Inflation as we speak right now is 29.9%. And by the time the report of the figures for February comes out by March 15th, we should be seeing inflation at 30-point-something%. Do you see the CBN actually achieving the 21.4%, going by some of this on unabated macroeconomic fundamentals staring at us in the face?
I think I'm positive around it because even at the initial, if you check the expectation of IMF on inflation figure for Nigeria, they were around 19 or something. I'm going to capture 1.45. It seems that the IMF is even more hawkish than the central bank in that regard. So 21.45 is not totally out of place. And like I mentioned earlier on, I will start enjoying the effect of being here anytime soon. And also don't also forget that we get to a level where we get harvest season, and that will also help in actually reducing the pressure on food pricing as well. And also don't also forget that the current government actually focus on creating infrastructure in terms of road constructions and the like. And when we start seeing the effect of these things, it simply means that all the bottlenecks that it takes to convey food from the north to the south would have been actually reduced or totally eradicated by them. So we expect to start seeing the benefits of some of those aggressive projects that they mentioned earlier on that they actually embarking on to actually see on inflation. So for me, I don't think that 1.45 is actually aggressive one on the part of central bank. I think it's a good position. So I